You're watching Economic Lifelines Nigeria. I'm Wole Famrewa, and our program tells you stories of how authorities in Nigeria are driving the recovery and growth of key sectors of the economy. The doomsday scenarios painted in the 1970s for a crippling global oil shortage now seem very unlikely, given new discoveries and advancement in technologies used to extract the black gold. However, the changing dynamics of the oil industry over the last decade reflect the need for Nigeria, Africa's top crude oil producer, to make contingency plans to better cope with volatility in oil price and production. The sharp decline in oil prices seen in the early stages of the global financial crisis in 2008 led to a 20% drop in the value of the naira in 2 months. And this weakness of the local currency increased operating costs for many businesses that relied on imported products. In a matter of months, segments of Nigeria's capital markets, banking sector, downstream oil and manufacturing industries were in severe decline as authorities struggled to react to the sharp fall in the oil price. The price of oil fell from an all-time high of $147 per barrel to $32 per barrel in just 6 months. It's volatility like this that spurred the formation of sovereign wealth funds across the world.
The sovereign wealth funds started off globally as a tool of fiscal discipline. Okay, it's a way to save money and invest to advance national development. Most sovereign wealth funds started out with 2 mandates, which is to provide stabilization support to the economy and also to provide a savings base for future generation. So that's really is how most sovereign wealth funds started out.
Once there's volatility in oil prices, and people that invest in Nigeria look at Nigeria as just a proxy for oil. If oil goes down, they look at the country as going down. Having something like the sovereign wealth fund standing there to stem the flow of investment dollars out and being able to provide a backing to that is significant. So that the fact that the oil prices fall does not mean a Dangote cement has to fall. Because honestly, one does not actually go with the other. Or does the fall of oil prices mean that Nigerians stop to eat? So why should a Unilever suffer? Why should a Cadbury suffer? People that produce consumer goods that basic Nigerians are eating every day. And these are the kind of things that the sovereign wealth fund will be able to help stabilize that and kind of balance that out so that a crash in one market does not cascade 100% ripple through the entire economy as it has before.
It's more than $4 trillion across the world. There are a handful that are very, very, very big. The Norwegian is the biggest, over $700 billion. You know what's funny? I want to point out to you. The Norwegian Sovereign Wealth Fund started out with $300 million in 1996. It's $700 billion and change. They receive $1 billion a week into their Sovereign Wealth Fund. The Kuwaiti is the oldest. Started in 1956 with under $30 million. Today it's $250 billion.
Former Nigerian President Olusegun Obasanjo made the first significant step in saving petrodollars to better cope with volatility in oil prices.
The ECA started with excess crude account was basically the difference between the budgeted price for oil and the market price for oil, and that was going to a special account as savings. Now, under the Constitution, that account was seen as illegal, unconstitutional, in the sense that it was not all revenues was going to Federation accounts. So to try and normalize that savings culture they're trying to build up, the idea of having a sovereign wealth fund modeled on the sovereign wealth funds you see in other developing countries, and especially some of the Middle Eastern sovereign wealth funds, was brought up, and that's how we got to this juncture.
The excess crude account, as I said, was just an account. Sovereign wealth fund actually takes it to the next level, which is moving from strictly just putting money, piling cash aside, to taking money aside and putting that money to work in the country as a whole. And so rather than having government-owned entities, you now have the government invest into catalyze private investments into the areas that it sees as an area of focus, like infrastructure and what you've seen them do up to this point.
There's a law passed by the National Assembly that establishes the Sovereign Wealth Fund for Nigeria. Everything else prior to that was an administrative arrangement. This has a legal backing. And this is very important because despite some of the challenges we have seen in terms of the views different parties have about the Sovereign Wealth Fund, the fact is there's a law that backs the Sovereign Wealth Fund in Nigeria. And most of the countries actually, believe it or not, admire what we have done with the Act. It's very detailed, it's very specific in how the fund should be run.
Unlike most sovereign wealth funds across the world that are usually focused on providing savings for future generations and stabilizing the economy when oil prices drop, Nigeria's sovereign wealth fund has a third mandate: to invest in infrastructure. The fund is broken up into 3 sub-funds with different mandates.
There are 3 funds. The stabilization fund is run as close to cash as possible. We have finished the investment policy statement. We've signed a custody agreement. We are in the process of selecting managers and we'll start investing, and our objective was to start investing this month. The stabilization fund is close to cash as possible, frankly, because the idea is to make sure you have enough liquidity to provide stabilization in terms of economic stress. The benchmark we have chosen are 2 benchmarks. One is US Treasuries, 1 to 3 year US Treasuries, and the second one is 1 to 3 year Barclays corporate bonds. The reporting currency is US dollar, and the reason is because US dollar is our intervention currency. So we are going to try with an objective to preserve purchasing power in US dollars. So it's a very safe liquid investment with a very modest objective, which is to earn above US inflation. That way we can preserve purchasing power in dollars. The Future Generation Fund is a classic savings fund. The objective is to earn US inflation plus 500 basis points. That's the objective of that fund. And
to be invested in?
It's going to be diversified across listed securities and unlisted securities. So we're looking at everything from international equity and domestic equity, international debt and domestic debt. We're looking at private equity, we're looking at real estate. We're looking at a full broad diversification. That fund will be largely outsourced. So we're in the process of picking managers for the various funds. The infrastructure fund is very interesting because that we're going to run internally largely, but through collaborations with partners. So we signed a collaboration with General Electric. We're signing one today with IFC, and we have about 3 more in the pipeline that we're working on. We want to keep those collaborations very tight and keep it very small. People who are going to develop pipelines with, we're going to co-invest with, we're going to do documentation, all the things you need, so that way, as a small team, we can leverage the resources of these bigger partners.
The savings culture and discipline reflected in the formation of a sovereign wealth fund in Nigeria provides many benefits to the country.
If you look at countries that have significant stabilization funds as part of their sovereign wealth fund, they're able to borrow money more cheaply when they need to borrow money because people believe those countries are safe and sound. 2, it also reflects the ability of the government to show discipline by providing a savings base.
Beyond lowering a country's cost of capital, sovereign wealth funds have provided significant financial resources to support the diversification of many economies away from oil.
That base of capital stock, when it's now channeled to invest in domestically, can actually have a significant effect economically. There are 3 countries I keep pointing out that I think have been in many ways a reflection of some of the benefits of what a sovereign wealth fund can achieve. One is Abu Dhabi, and the effect it had across even Dubai in terms of providing capital base for investing and also attracting foreign investment. Because once people think that you are able to co-invest with them, they'll come to your country. That's the reason why the rich are those ones that get money from the banks when they go for a loan. The reason is people believe that you have the ability to also co-fund your part of the transaction. So that's one of the benefits we've seen in Abu Dhabi. I think we can debate till tomorrow whether it's coincidental or causal, but the reality is that you couldn't separate the two, frankly, in my opinion, because this is a region I watched develop. I started marketing in this region since in 1999 and watched it develop very aggressively, with the advent of the sovereign wealth fund. Second one is Singapore. You've also seen the benefit of that. Singapore has 2 funds. One invests domestically, one invests internationally. Both of them are close to $500 billion or more. And then you also have seen the impact in places like China.
We head into a short break. When we come back, we take a look at what impact Nigeria's sovereign wealth fund will have on growth and development in the country. Stay tuned.